Every year, millions of Americans overpay thousands in taxes legally. The IRS won't tell you what you're missing. But today, we're exposing the hidden tax deductions most people never claim. Mention average refund stats. Why middle-class families lose the most. How tax law favors informed people. How the US tax system really works. Explain. Standard deduction versus itemized deduction. Adjusted gross income AGI. Tax brackets. Refund versus tax liability. Mention. Internal Revenue Service. Explain why the system rewards people who track expenses. Adjusted gross income AGI. Adjusted gross income AGI is a critical number. Think of it as your intermediate income. It is not your final taxable income, but rather a calculation that defines how much tax you will ultimately owe. The AGI formula: total income, wages, interest, investments minus above-the-line deductions, for example, student loan interest, retirement contributions. The importance of AGI: your AGI is the gateway. Many tax deductions, credits, and even your eligibility for certain government benefits are calculated based on this number. It is also the figure referenced in the diagram from which your final deductions are taken. Tax brackets. A common misconception is that your entire taxable income is taxed at a single rate. That is incorrect. The US tax system uses a progressive tax bracket system. This means you pay different rates on different portions of your income. The bracket system: imagine your income as a stack of buckets. Each bucket has a different, progressively higher tax rate. Marginal versus effective rate. The highest bracket your income reaches is your marginal rate. The effective rate is the actual overall percentage of your income you paid after averaging all the brackets together. 4. Tax liability versus refund. Once your final tax is calculated, it is compared to the payments you already made during the year. The Internal Revenue Service (IRS) is the government agency responsible for collecting taxes and enforcing tax laws. Tax liability: the total amount of tax you legally owe for the year. Refund: a refund occurs if the payments you already made through paycheck, withholding, or estimated payments are greater than your final tax liability. A refund is not free money. It is the IRS returning your overpayment. Why the system rewards people who track expenses. As shown in the diagram, tracking expenses is the key to maximizing your financial outcome if your qualifying expenses exceed the standard deduction. Unlocking itemized deductions: you cannot use itemized deductions, which are often larger than the standard deduction for people with mortgages, high medical bills, or significant charitable contributions, unless you have kept detailed records and receipts. Lowering taxable income by choosing the larger deduction, itemized. You effectively lower your final taxable income, the $25,000 in the diagram example. Increasing the odds of a refund: lowering your taxable income directly reduces your final tax liability. If your liability is lower than what you paid, your refund increases. The above-the-line deductions: most powerful hidden section. These reduce AGI. Very powerful. Hidden deduction #1 HSA contributions. Who qualifies? Triple tax advantage. Long-term strategy. Mention. Internal Revenue Service rules for HSA. Hidden deduction #to student loan interest. Income phase-outs. Married filing jointly impact. Strategy for maximizing deduction. Hidden deduction #3 self-employed health insurance. For freelancers, YouTubers, side hustlers. Hidden deduction for traditional IRA contributions. Phase-out income levels. Why high earners miss this. Self-employed and side hustle hidden deductions. Massive opportunity for content creators and gig workers. Deductible items: home office, internet, phone bills, car mileage, equipment, software subscriptions. Explain. Standard mileage rate. Actual expense method. Mention Internal Revenue Service mileage guidelines. Middle class and family hidden deductions. 1. Child and family deductions. Child tax credit. Child care credit. Dependent care FSA. Explain income thresholds. 2. Education deductions. Lifetime learning credit. American Opportunity Credit. Mention United States Department of Education for credibility reference. 3. Medical expense deductions. Most people don't know. Mileage to doctor. Medical equipment. Therapy. Long-term care. Explain 7.5% AAGI rule. 4. Charitable donations hidden boosters. Cash donations. Donated goods. Volunteer mileage. Non-cash valuation. Mention